Good morning, everybody.
Welcome to the jungle.
Everything's wonderful again.
Okay,
Yay!
good.
Everything got fixed. Yay!
Yeah,
Everything's fixed.
yeah. We'll look at this a little bit harder. Yeah, it's interesting.
Today's a good
Yeah.
day.
Interesting. Well, it
So
hasn't started yet. The
Well,
pre-market looks good.
it's nice to see.
I will say, Paul, it's
Unfortunately,
nice to see some green.
it's based on nothing, you
Uh,
know,
Yeah.
the
tweets.
market doesn't give a shit. The market doesn't give a shit. Has no conscience, has no feelings, does just rolls with its own gig.
I don't,
Care
uh,
about
I
it.
don't, I don't think about that. I think we're out of control right now, but I'll go into that in a little second here. But it's not, we're definitely not in a standard market. And the market structure is broken right now. So it's hard to judge what's happening in this market. Everyone's happy today. Yesterday, we basically got everything back that we lost the day before, which, I mean, this is highly unusual in markets, what we're seeing. So, we can celebrate, but how long does that celebration last until the next tweet comes out or to the next, you know, press conference or whatever? But let's get started. I won't be
I've
that. Hey,
I've never
Margaret's here. Hi, Margaret.
Yeah, I'm driving my little Mustang to Atlanta, so I got to pay attention to the road, but I wanted to listen in.
All right, sweet. It's nice to have you back. Haven't seen you in a while. I'm glad you're
I,
able to join us live for
I,
once.
I
Yeah.
know. I telemedicines are just going out the roof, so I'm always busy in the morning.
Yeah. Well, I'm glad you're here. So
Well, thanks.
drive
Thank
safe, and don't pay any attention to the people in your phone right now.
I, yeah, I'm looking at the road, but I've got
Okay,
the
good.
automatic driving, so we'll see how that goes.
All right, sweet. All right. So yeah, this was yesterday, and when we compared it to what this is the heat map of yesterday, and what a comparison from last week when everything was red and we had a few dots of green. Um, so I mean, it was hard. If you were jumping in on this, you probably did pretty good, and depending on where you got in, and if you got out. Um, and this is the heat map of the ETFs, and you can see the red is only in these inverse ETFs. When the markets are going down, these are the when you're short. So if you got caught in one of those and you didn't get out, the 2% down actually turned into about 7.5%, or 8% down. So this is why you really got to watch if you get into these inverse ETFs. They're only made for a day of trading. They're not made for investing. So again, and yesterday we saw gold and silver, and we're starting to see some of the metals come down a bit, and we'll look at that. And then and yesterday we had talks with India. We had JD Vance saying that India and the US are getting close, and then Trump talked about he's not going to fire Powell anymore, so everyone was happy. Market went up, regained everything we had the day before. Today everyone's happy. Okay, after Trump softens his stance on Powell, 10 years come down just a tad. Okay, oil's up, Nasdaq's up. Everybody's happy. Uh, Stock futures climb Wednesday after Donald Trump said he doesn't plan to remove uh, Chairman Powell from his post. They got a boost from Trump. Also signaled tariffs on Chinese imports may go down. Okay, may go down. Okay, so this market is so in a spring ready to pounce either way based on words, and I haven't seen anything happen in China yet. Okay, I haven't seen anything happen in India yet, but the market is reacting pretty much to words and tweets, and it's interesting that the psyche of the market and everyone feels good about it, which is fine. Okay, and we should feel good about it, but we're not in what I call a normal market. So let's go take a look of what I'm trying to say. And
market gonna be with all this AI and with, like you said, it's gonna spin.
so if we look at the Dow, I mean here was the tariffs, okay, and then we had the world's back to normal, and then we're still in this down trace, and here's where we're going to open up today on this yellow line. We're still right on the edge of this trend, okay, where we were up here. So when you put things in perspective, when you look at it, I mean, we're not back to where we were, okay, but I mean, it's up, okay, but why is it up? And if we go out a little bit, and my original job was a quality engineer, and what quality engineers do is we look at processes and we determine from the process how much of the output of a process is within a bell curve of plus or minus 3 standard deviations. Okay, so a normal process running along will run between 1 and 3 standard deviations, and something happens to pop that out of that, that's called a special cause of variation. If a process is in control and capable, you have normal causes that give you the variation, like we see here. Okay, these are normal markets. Okay, special cause happened right here and moved this market up. What was that? That was the election. And then we got into, okay, you see how we're just, we're not jerking around, we're moving. Again, here's another special cause. What was this of January? Came back up even when we were in the downtrend. And then you can see how all of a sudden with these tariffs, we are all over the place. So I look at this, as a quality engineer and say, this process is now out of control. We're running on special causes of variation, not normal causes of variation in the markets. Earnings reports and Fed reports and all that, that give us the ups and downs, but nothing like this where we're jerking ourselves around, up and down and up and down. So just keep that in the back of your mind that we're not back to where we were, during normal market times. And until this, I call this a broken market structure. Until we get back to a normal market structure, we're going to expect this kind of volatility up and down. So it's going to be, if you do trade or you try to invest, we're going to be going through a lot of highs and lows, both emotionally and on the charts. Okay, so just be aware that I don't think this is over, and I don't think that today is by any means out of the woods yet. We're still below the 200. We still have a death cross. We're still within the downward channel at this point. Okay, our oscillators are still haven't popped up. Until I see, more normal market and, popping back up and the trend going back, one day is not a trend, okay? Then I'll be a little more positive, So here's the Dow and here's the SPY, S&P, and S&P is going to open right up here, right on the top of the channel line and right below where we're going to see resistance where sell orders are. So we'll see what happens. And I always say it's not where it opens, it's where it closes. So don't get sucked in unless you're, and follow your trading plan, whatever your trading plan is. Don't get sucked in emotionally on what's going on right now. I'm not saying it's a bad thing. I like to see the market go up, but why is it going up? Why is it going down? And it's a day-to-day, festive news that comes out. And again, here's your cues. We're going to open up right above here, above the channel. But we're right where we're going to find some sell orders. So we're going to see some resistance on the upside. And I want to see the oscillators turn. So I'm just waiting for the charts to tell me. And the charts, are backward looking. But again, one day does not make a trend. This will be the second day up. Okay, we've had several days down. So, we're waiting for the up days. And I'm fine to wait too. NVIDIA, okay, NVIDIA is going to open right here, right on its upper channel. We've got the 9. It's still below the 9. Still got some sells. Still below the 20. Look at the trends. The trends on the moving averages are still down. Hasn't kicked up yet. Oscillators are not back yet on NVIDIA. I mean, it's going to be a big jump up. We're going to have a nice gap up. But again, we're looking at this craziness. It's not a normal process of what I'm seeing, in the market. Meta. Okay, same kind of thing. We're going to open up above our channel, basically, but the channel will change. But we're going to open up right at the 9, right below the 9, and then we have sells right above. So there's some resistance right above where we're opening. We'll see, if we open and come back down. Again, we've done that before. We've opened high here, closed down, opened high here, closed down, opened high here, closed down, high down, high down. So, we're not out of the woods yet on a lot of what we're seeing. From what I'm seeing, from my opinion. Google. Again, Google, downward trend, We didn't put where we're opening. Oh, we did. It's right there, right here, about the same is what we're seeing. The interesting one is Tesla. Tesla came out with earnings, and I don't think they were the most stellar earnings, but we're going to open up right here. Okay, so Tesla's actually getting a little bit above its resistance level, which we haven't been able to do for a while. Is it something I jump in on? Not really yet. I got downward Bollinger Bands. I still have flat oscillators. Okay, am I going to be tricked into joining the party today? I don't think I am personally on some of these. One thing that's interesting is, where the money was going was gold, and gold's going to open up below. So we came up and hit our intermediate resistance level for 2 days. And now the gold trade, since, it's risk off and everyone's going back to equities, the gold trade, it's going to start, money will be coming out of that and into equities if that market continues to hold. Okay. Bitcoin has kind of decoupled. I was kind of waiting to see if it was going to follow gold in the market, but Bitcoin, after it consolidated, this really never went through too much of the craziness and out of control. Here's where we were, and it stayed within its, normal markets with Bitcoin. And then we started this upward trend up, and we're going to open up, right here about where we closed on Bitcoin. But Bitcoin's now at 93.6. Okay, so it's bucking the trend, and we'll see if that continues. And again, MicroStrategy. MicroStrategy is right up against resistance, and when you have markets that are out of control and you're bouncing back and forth, a lot of times you blow right through these technicals, because the technicals can't keep up with the variation, the high rate of variation that we're seeing fling all over. So it really messes up with some of the technicals. So that's where we see, resistance appear, resistance disappear. We blow through resistance, but you have, the sell orders where the market is saying, 370.22 is where I put my orders. So they're kind of ignoring this resistance. We'll see what happens if it goes, but it's looking to open up right on the upper Bollinger Band on MicroStrategy. Let's look at Bitcoin's ETF, and we talked about this yesterday. Again, right up on the Bollinger Band. Oscillators look good. Here's where it's going to open today. It's going to gap up. Then you've got some sell orders on the bottom side of resistance instead of the top side. So we'll see what happens with that. But so far, Bitcoin has done pretty well in this market of fluctuating back and down. We looked at a little bit at some of the momentum stocks. Kroger's still in there. We looked at that yesterday. There's no resistance level up here. We've got some sells 74.91. We looked at Paul brought in TOI yesterday. It went up and hit right on where the sell orders were and then retreated back. So now we're at 1, 2, 3 above the times above the upper Bollinger. You usually don't get more than 4 and 5, and we look for it to come back in, and always watch for the upper or the upper resistance level to come into play here. And then there's a couple others. It's really weird charts. Here's Adamus Energy. Okay. All of a sudden, no more resistance here. We just have sell orders. So, I mean, above the 200, we have stocks out there that if you want to try and play them, follow your trading plan, and set your stops if you're in it, because as fast as these things go up, they can go down. And I don't want you to get caught in the trap. So utilize stops. Some of the others we looked at yesterday, this is below the 200. ADM kept moving up. Okay, we've got FIS. It's going to hit the 200, so we'll see if it gets by that or if the 200 level actually stops it. You've got two. We looked at Dollar Tree yesterday. Dollar Tree had right along the upper Bollinger, crossed over the 200. With the economy, people will be going there. We also looked at DG. Paul brought that up. DG looks the same as Dollar Tree. Yesterday we looked at Mosaic. That's some resistance above it, but we're above the 200. So we're starting to see some stocks come back above the 200, okay, which is good, which is bullish. When I looked at the sectors, the two sectors that I saw that may actually pull in and get above the 200 are the financials. It's still below it. Okay, but we'll see if it pops above. Here's where we're going to open today, above the 200 on XLF. Okay, so why does that happen? You can go look. Within that, you can see Goldman Sachs. Goldman Sachs, you know, here's where we had the craziness. It went into consolidation. And this is what we're trying to look at, you know, basically consolidation and then break out to the top. And that's what we're seeing, you know, Goldman Sachs do that. Morgan Stanley, consolidation above the 9. We'll see if it can pop up. Again, these are below the 200, but these are the kind of stocks that'll move the XLF. And the other ones we saw, we talked about, trying to do this as fast as I can, guys. But we got on XLU closed above the 200, but it's been playing with the 200. We'll see if it can get it past there. But we got oscillators. This is the utility sector, which I'm surprised, you know, with the market turning, that utilities are still rolling. But we have things like what's pulling this up, Duke Energy. See, Duke's above the 200, above the 50, above the 20. You know, that's a nice run on Duke Energy. But again, we got resistance right above where it's at. Utilize your charts if you're in. Set your stops if you're in. AEP, same thing. There's an electric power above the 200, above the 50, above the 9. We've got trending on the moving averages up. Whereas where we look at the markets, the indexes and other stocks, they're trending down. So these are what we're looking for to keep you going. The trend's your friend. But again, we've hit this resistance level. So it's hard to get past that. Always use your charts, always use your trading plans. And I think,
You know,
I mean, there's a ton out,
pretty good.
there's a ton out there. Okay. But be careful, because as fast as they go up, they can go down. But use your trading plans. There are stocks out there that if you want to trade, you can trade. Again, set your stops. So anyway, that's my lecture for today, Trent. I'll hand it over to you.
So markets are about confidence. Markets are about confidence.
Can't find your badge.
Oh, there we go. And value. This is a chart of the US dollar, DXY, and gold going back 1 year. When we started the year out, right around, say, the week of, or the 14th, 13th of January, we started to see a decline in the US dollar. That is a sign of lack of confidence in the US currency, but probably more of the underlying fabric of our economic policies. And we have seen the US dollar go from intraday high of 110 to presently at 99, basically 99 cents on the dollar. Yet gold has risen. When you have lack of confidence in fiat currency, it has to go somewhere. And that has been gold for roughly since the 13th. We saw a pickup, a break, a sideways creation here, accumulation phase, and then we've seen it move higher. And then all of a sudden, in the last, 48 hours, we've seen Bitcoin take off to today. Right now, it's trading at $93 on the sorry, hold on a second. 93,000 and some change. And once again, why is that happening? You're seeing that comparison. You compare that to gold today, and gold is selling off today. Markets are looking for value, but the underlying theme right now is a lack of confidence in our currency, US dollar currency. So it's markets are looking for a place to go to get value and confidence. And now we're seeing that happen in Bitcoin, along with Ripple, and a handful of others. And so and you think about yesterday's move was about a headline news. I'm not going to fire Jerome Powell. Does he have the power to fire Jerome Powell should be the question. Mark probably could answer that. But the thing about this is about confidence. And right now, the United States has its peers have a lack of confidence in our country, in how we're doing things, tariff policies, this, that, and the other. So when you see markets move like they're moving today, I'm looking at NVIDIA, it's going to open up against its 15-day moving average, which is, I call that trade line. And will it break through that? Why would it break through that? Confidence. Elon came out with his earnings down roughly 20% or so off of what they were projected to be. That's a lack of confidence, in my opinion, that nobody's buying Teslas. Nobody's buying product. The other thing I want to show you that I think will be a big influence on confidence is the effects of these the tariffs that have gone in place. In the United States, U.S. imports from China have declined 64%. This is a comparison between week-over-week changes in ocean bookings, percentage change between April 1st and to April 8th, and March 24th to March 31st. A decline in U.S. imports from China, 64%. That hasn't filtered in yet. It's just getting reported this week on headline news like CNBC and that kind of thing. U.S. exports to China down 36%. We're not seeing the full picture of the effects of this tariff, what I call war, between us, China, and other countries. Until we probably get into May, will we not see that? Bob has been kind enough to share his information on what's coming, what are happening with ships. A lot of ships that are coming out of China have been turned around and sent back. We can see that in those import numbers from China, down 64%. That hasn't filtered in. When you go to the Target, the Walmart, the grocery store, start to look at the shelves. Are we seeing a thinning of the shelves? And if we are, to me, that is just another sign that we're not out of the woods on this yet. We need to see confidence come back into the US dollar. We need to see confidence from other countries to come back into the United States and say, hey, we like your economic policy. We've gotten through this jungle, this little tariff war thing. We're starting to see concrete decisions being made. And I think at that point, we'll see the stock market in the confidence in the U.S. equity markets or at U.S. in general will start to move higher. Until then, a simple headline that says, I'm not going to fire Jerome Powell makes the market go up 400 or 500 points. Be careful. Just be careful here. It could be just another rug pull. So let's open it up to the floor. Any ideas, questions, input?
I'd like to ask Mark about. He showed us the chart on Bitcoin. It looks like it's in a cup and handle mode, and it's in break. I presume you've said that already. In sort of breakout mode.
Yeah, I mean, this is broken out. Let me get it back up here for you. And I've been watching this. We watch it every day. I mean, it was in a consolidation phase, which I love these. This is just normal, natural market patterns, which is what I said. We've kind of broken it on the indexes and the Mag 7s, where you go up, you go down, then you consolidate, and then it decides which way it's going to break out. And it broke out for me back on the 20th of April when it broke out as consolidation. Then it hit resistance at the 200. I said, if it can get past the 200 sustainably, it's off to the races. And that's what happened, 2 days ago. And now it's still up, it's going to open up, it's still up again, and it's within its upward channel. And I look at all the oscillators, and it goes back to, like Trent was saying, and I've been saying, and I follow Bitcoin. I've been following it since, 19 and 2020. and I own Bitcoin. It's one of my long-term holdings. And I own MicroStrategy and I own the IBIT. And because I spent a lot of time looking at it and the store of value, and I've also studied the devaluation of our dollar and our purchasing power here in the United States, and inflation and how that affects it. And so I moved money over to what I think is digital capital, digital gold, basically. When you look at AI and where our financial system is going to go, it's going to go into the blockchain. It's going to get off of the analog and go to the digital. And Bitcoin only has 21 million. And I'm looking and seeing governments are buying it. The US is going to have a Bitcoin reserve. You've got UAE, you've got a bunch of countries that are doing a bunch of states. You've got a bunch of companies now, 70 or so, that are actually using Bitcoin in their reserve, like MicroStrategy does, instead of treasury bills. You've got the Senate looking at using stable coins backed by treasuries in US dollars to be able to move money quickly. So I see, for me, the future, and that's why I'm in it. And again, it's very volatile, and you've got to have, a strong heart, because it can wipe you out some days. But again, Paul always talks about conviction, and this for me has conviction. And right now it broke above the 200, and that's key to me. When it breaks above 200, that means we're in a bullish technical pattern as opposed to being under the 200. And if you look at Bitcoin, it's only been under for a while. It's broken through. The indexes have not. Okay. And then I see gold now hit the top, and gold is coming back down. So we'll see. Hopefully I answered your question, Patrick.
Thanks. Just one other thing. IBD published 5 stocks yesterday that are in cup and handle and pre-breakout mode. 2 of them were Melly and Netflix. So I just wondering if you want to look at those.
Yeah, Melly is interesting because you brought that up, and I've looked at it. And what you're talking about is probably this right here, and then this.
Yeah.
I like Melly. Look at Melly is above its 200 too. Okay, that's technically bullish. What I need to see is it get past this line of resistance right here. And in these markets, it can blow right through there, because this hasn't been as bad as what we've seen in a lot of stocks per se. Let's go back, as Mike always says, look back and to the left, and you can see this line of resistance is pretty tight here, Patrick, all the way back through September of 24. Came up again, hit it. Came up again, hit it. Came up, got past it, then boom, 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 back down to it. Tried it again. So that's what I look at. It's going to have to get past that in a sustainable manner. You've got some people up here with sales about 2204, but so you could pop up there and you see we've done that before. But I'm just, it's having trouble getting past that roof.
Yeah, a lot of South American countries have cut a deal, or about to cut a deal with Trump anyway. And so that could have a bearing on its trajectory.
Mm-hmm. What other one did you have that you were talking about?
Netflix.
Oh, okay. Yeah, this one's kind of, again, we're up against this resistance level, and we need to get past it. We hit it here, and you think about it, and it tried to get past it, Patrick, here, and it came back down. It got beat back down. We do have sell orders, up here at 1081. But again, we're going to see it pop up, and we'll see what happens. But what I like about Netflix, look, it's been above the 200 through this whole thing, and when you get into fundamentals, Paul has talked about Netflix, and it's kind of a place that you're not going to give up your net list even in a recession, because you're going to sit at home. You don't want to be bored, your Netflix. I mean,
Mark, can you look at Palantir?
Yep.
Similar situation, up against resistance.
And we'll see, because what's happening today will blow up a little bit, but today is one day, connected to a possibility of someone saying that we're getting along fine with China and we're going to have an agreement. And Bassett came out yesterday and said, this thing's overblown with China, but you just showed what the boats were, and I've seen videos in China of the factories being shut down and people out of work. So I don't
Yeah.
think everything's fine either on either side yet, but words and jawboning can make the market the market is looking, especially with the algorithms, for anything positive to put money back in. And I don't want to get trapped in it yet because the charts aren't telling me really, other than some of the ones we're looking at, we're like, hey, okay, we're above the 200, like Netflix, like, Palantir sitting here. It hasn't gone below the 200, So again, if you were Paul Tudor Jones, you would have gotten into it back here and you'd still be in that or Palantir, and just using the 200.
Look at MRCY. This is another one of Kerry's ideas. Similar situation. Back at it. Third time.
You look at these charts and they're all just like, they're all waiting. We look at patterns. And what I like about MRCI, again, it's over the 200. That's always positive for me, If you're swing trading, you swing up, you swing down, you swing up, you swing down, you swing up. Here we've had trouble on this intermediate resistance level several times. But this looks a lot like, Melly or what we were, not Melly, I forget what we were looking at earlier, where it popped up above, and came back down. So, you got anything else?
Uber is another one on his list that meets it's above my criteria, but it's sort of fragile, in my opinion.
Yeah, here's that resistance level too, but and you got your Bollinger Bands kind of fumbling down a little bit, but your oscillators are there, but this resistance on a swing trade is there on a longer term, you're above the 200 and you made it. Look here, it fought the 200 here. Once it got above it back in February, it fought it during March, middle of March, and then it popped down and then came back through, so I'm impressed at anything that can be over the 200 right now, because we looked at only 30% of the S&P was above the 200, a couple days ago.
Yeah. I think from a long-term standpoint, you've reiterated many times, Paul Tudor Jones is its number one rule. That 200-day is like a line in the sand, a big one. And it's very important to have that process and have at least one big line in the sand for you. And as you can see, I look at SPY and I'm like, for it to go, it's got to get over 573 on SPY just to get above the 200. Is that what it is at?
573.69.
Yeah, that's a big.
But think about his investment style. You look back here, he would have been in it on the S&P back here, in June, at 312. And he wouldn't even have to worry about doing anything in his trading until about right here. And he gets out at 439, 312 to 439. Then you got some chop. You might have got back in here, but then you're out. And you ride it. You might get back in, you're out. And then he gets back in, and you had been, from 393 to 572. You just rode it. That's the beauty of, if for investments, that's it for me. Now you can get into some chop where it goes up and down above it. And this is the daily chart. On a weekly chart, I would use the 50-day moving or 50-week moving average. If I was doing that, let's go to the weekly. And you can see I use the 50 because the 50 rides a little higher, and I would have been out instead of waiting, to come down here and maybe get out, at 457. And I'll just wait for the weekly. So I wait for the weekly to come back up, like JP Morgan. I've been watching JP Morgan. Okay. So JP Morgan came down, closed below it, but on a candle here, closed back above. This week, it's touched on it a little bit, come back up. It's under the 9-week, but I'm not looking at the 9 really. If you're doing an investment, I'm looking at the 50. If we move JP Morgan to the daily, yep. Okay, let's get a little closer so we can see it. You can see JP Morgan did cross below the 200 and then came back up yesterday above the 9 and the 200. So again, when you get into these lower, like the dailies, you get a lot of chop back and forth. So you buy, you sell, you buy, you sell. What you do when you get into the weeklies, you get out of this chop, up and down. And Paul had brought up, in the Discord that he was trying out, instead of using the 9, using the 5, which is cool. It's closer, but you're going to get a lot more false signals that, the shorter time period that you put in. So you can always back out to the weekly and use the weekly to trade, or you can use the 200 on the daily. But again, if you had used the 200 here, you might have got out. You might have got back, well, not a full candle. You might have got back in here, then you'd probably get out, so you can get some chop on that on the 200 too. So in these kind of situations, I get out, I would wait until I saw a sustainable move to the upside, before on an investment type trade on a technical basis, for JP Morgan. So I've got a list of companies that I'm watching, for a long term when it comes back, what am I going to get in as an investment? And so I made a list of like my top 20 companies that I think are best in class. And I'm just waiting for them to, to come back up, and get above their 50s in a sustainable manner. And then I'll probably buy into some of those, as an investment. But right now, I'm not really doing that.
Bob had brought up energy plays the other day about, I guess, a move into coal companies. And so I created a list. I put it up. I put a link here in the chat.
You are so wonderful.
Do you have a symbol like Peabody or somebody?
Let's see, ARLP. Now, this may not be a lot of these probably won't meet your criteria when it comes to volume, but the commonality here is they're above their 200, they're above my 62, they're above the 15. And they're sort of in that, in a lot of cases, possibly up against resistance right now, but they're playing from a longer term point of view. If we do see a shift into coal related companies for energy, for the data center build out, these could be possible, some of the ones to take a look at.
Yep. You have another one?
Yeah.
This is ARLP.
NC, very low volume on this one.
This is the weekly chart. You can see even on the weekly, we're hitting resistance for 3 weeks, basically.
Yeah.
Let's go to the daily. Let's go to the daily and see. And for a swing trade, if the volume's that low, that's just 7,000.
These are definitely not, in my opinion, swing trades. These are more like, where is the money going to flow in the next 12 months? Infrastructure, another example of, build out in infrastructure. Let me see if I can find a couple there, but a lot of these are not about the day. So for instance, Road, ROAD.
Yeah, I have that one on my list.
Just at 200, it looks like.
Yeah.
But if you're looking at long term, because it's been brought up before, where AI is one thing, what's going to be in favor in the next, say, 6 to 12 months to keep an eye on? And I believe energy and infrastructure build out is going to be one of those to consider for sure.
Yeah, I mean, like I do, I'm using this as time to put together a list of, top companies or top, ETFs that I think will be investable. But based on what I think JP Morgan's best in class in, in financials. I think ExxonMobil is probably best in class in energy, just Berkshire Hathaway, definitely in insurance, and investments. Those are the kind of companies I'm looking at that I would, utilize technicals to tell me when to get in and when to get out, and on those, it would be more utilizing the 50-week for me than doing a daily swing trade. So, but I would, there's going to be opportunities. There's going to be huge opportunities, but you got to have a plan in place. And my plan is to wait, put a list together. I don't know where I put it.
What is Paul put up ED? Is that correct?
Yeah, that's I think one of the best plays for energy, but for a swing trade, people might be look at SFM Sprouts. I like Sprouts.
Yeah, ED.
Is that the store,
It's a
Yeah, it's
farm.
Sprouts store.
grocery store?
Ed, the problem I have with Ed is this green line that it can't get past, you know. But
You're not, you don't have
people,
the screen up.
oh, sorry, guys. Again, the green line, our resistance level, it's hard trouble getting past that. And SFM definitely has had a nice run up. And I like SFM because it has volume too down here. So you have a liquid market for trading. And again, this has been a nice one because it goes 9 upper Bollinger, 9 upper Bollinger. They're starting to get closer to the 9 in the Bollinger. And then you got some resistance up at 170.55, but we're at 163. Oscillators look pretty good.
Can you look at, actually, Payman asked, do you have one favorite swing trade stock that you are buying into today?
No.
Problem with today is
if-
the problem with today is that we have so much euphoria in the morning.
Yeah, I mean, there's nothing that there's nothing that I'm really gonna do today. I mean, I'm gonna watch the cryptos still, you know. I think you're gonna see some movement. This is under the 200 in the financials. Okay, like Morgan Stanley. Again, I'm not gonna get into any of these at this point. I'll be watching Goldman Sachs because I like this pattern and we're consolidating, you know, much like we did with Bitcoin, and to see if it can go any higher. Because if I can get some traction out of here, you've got, you know, 540.91 where the sells are, and we're at 519, you know, on a Goldman, and I'm seeing a nice MACD. Again, it's under the 200, but there's a lot of stocks under the 200. So
Most banks reported well.
yeah, I don't think we got into the bulk of the regionals yet, but we'll see, you know.
Like these
Yeah.
big banks.
Yeah,
Yeah.
big banks because
Yeah.
of trading. They're all trading related. If you look at why they made money, because they're trading. And why are they trading? They're trading well because of this, you
Volatility.
know. Yeah, it's just, this is sell, you know. Buy, look at this. I mean, what do we have here? You know, 241, 256, and now we've kind of come down 75.
I will note that, you know, there was a concern about, geez, earnings. So like GE, many or VRT, there seems to be more positive earnings aside
You've
from
got-
guidance. You know, everybody doesn't know what's going on.
You gotta know that earnings estimates have been coming down. So if you look at any time, 65 to 70% of the S&P hit their earnings. But if you look at what analysts do, they'll look at it and they will move their earnings down, and then companies hit it. Move their earnings down, companies hit it. So take that with kind of a grain of salt, Paul, sometimes, that, you know, that the earnings are always going, you know, in a positive way. We beat earnings, but the earnings, the bar is down.
They screwed up on Tesla. Tesla's didn't do too good on their earnings, but I think people are buying because of Elon. People like Elon.
Can you take a look at,
That's gonna come
there's
back
a,
down. He's not gonna,
there's a,
that's
go
not
ahead.
gonna turn around until second quarter. I mean, I'm sorry, second half. That's gonna do a reverse. Because
Can you take a look
if you
at,
listened to the call last night, the call was not really that great. I mean, he's not his robo what do they call him? So there are two.
It's Optimus, I think, right?
Optimus, yeah.
Okay.
I mean, it's not going to happen until the end of the year. So you're talking about half, you know, the first half of next year, maybe. And then the robo taxis are not going to happen in Austin to the last quarter of this year. So really, I don't think earnings are really going to show any good signs until the end of the year, the last quarter of the following in 2026, first half or quarter, maybe. I don't know.
If you believe
Somewhere
in
in there,
robo
I think
taxis,
that
right?
we're not looking at any expansion in Tesla. I mean, you had to hear him last night. I don't know if anybody listened to the call, but there's no excitement out of Elon. That's for sure. It's actually sounds like he's depressed.
I
Working
would,
for Trump.
I would be if everyone's burning my cars up.
Yeah, yeah, but I think he's getting hit probably from his major investors like Barron. I'm sure Barron doesn't agree with his nose in the government, along with many others. He's not focused on the ball, he's focused on the dollar and the government. And I'm happy he's doing what he's doing, but at the end of the day, it's taking away. There's only so much focus you can do, right? And he has a lot of smart people around him, and that's why he's very successful.
Yep. Yeah, and he does that with everything he does.
Yeah.
I want to,
Also the
let's go back
seasonality
to
aspect of
yeah. Hey, Mike,
Yeah.
we talked yesterday about India, and it looks like we may have an agreement with India. What's the importance of India, and what does that mean to China?
China's screwed. Plain and simple. From a
Well,
geopolitical
elaborate.
standpoint, China and India don't like each other. They haven't since the communists came in power. Communists are building dams along some of the rivers that feed downstream into India. That's cutting off their lifeline. Okay. By having Modi come in and visit Trump being the fourth person to see him, that's a major paradigm shift in the geopolitical world. India has always been attached at the hip to Russia. They always wanted to be independent. They are the biggest democracy in the world. They're also divided upon themselves, as you might say. But by them being hoisted up the flagpole by Trump, and in this analysis or this scenario, China's screwed. Because now they're going to get, from a geopolitical sense, they have Taiwan that they're screaming that they want. India has just told them, you're going to get a fight like you've never seen before. Trump immediately came out and offered them F-35 fighters, top of the line, to a country that we never really had any kind of defense sharing or what have you with over the past post-war period. China's in big trouble. The next aspect of that is the tariffs and the strain that puts on China. Approximately 15% of their exports come to the US. They're getting shut down. They're already in recession. They have a bad economy. They manipulate their currency. They don't have very much positive going for them. And every day they're getting hemmed in more and more. India has a huge upside potential. A lot of software coding comes out of India. A lot of companies use India as their to generate the software at a very cheap price. And that's been going on for years. But that's going to become more and more prevalent going forward. India is going to start taking a much more higher place in the global economy. And nobody's talking about it. Everybody's talking about tariffs. Well, tariffs are, again, as I said before, is nothing more than a price adjustment. People are freaking out over it because the news media, and you're getting caught in this cycle of what's the term I want to use? Wash, rinse, and repeat, get away from the bigger problem than from what's really sitting there in front of you. But China's in a lot of trouble. India is a place for long-term investments now. You're going to see this open up like you've never seen anything open up. I mean, once they said F-35s to India, wait a minute, time out, peoples. Time out. Everything just went out the window. Trump's acting on multi levels, and it's getting lost within the minutia of just tariffs and the uncertainty in the U.S. markets. It's bigger than that. That's only just a hair.
I know that, you know,
Does that kind of address it?
I think India, looks at it and says, we have an opportunity to take away a lot of the manufacturing from China. We've already seen it with Apple moving production to India. It's like Vietnam did,
China's in big trouble. They're in big trouble. They expanded way too fast, got out way in front of their skis. One little hiccup, and look what's happened to them. Just go look at some of these cities that they built. They're tearing them down. In China, you're restricted on what you can invest in. So people were buying real estate. It's all spec. They're all broke. You're seeing a paradigm shift in the economy. And we're just watching here and we're bitching about, tariffs because you had what, a 14% or 16% change in the S&P? Well, you know what? In the grander scheme of things, that's a correction. Nothing more, nothing less. The fundamentals were shit coming into it. I mean, Biden screwed up the economy so bad. Now you're seeing what happened to it. Now you're getting that additional hiccup that comes along with it. It's change. Nobody likes change. Everybody likes to sit there in their pretty rooms and not have anything change for them.
It's interesting to me, Mike, that back in the pandemic when it was Kathy Wood and disruption. We're looking at industries with disruption, and that's where everyone threw their mind because it's disruption. It's changing. They're doing things differently. This is disruption too.
Yep.
So, hey, I
right
want to
now, you're in a chop zone because nobody knows what to do really.
Like I said, this process,
trading in these moves are algo moves.
It's out of control. It's not in control. It's outside basic market structure right now, my opinion. I want to go to someone had a question about SPY real quick. And the question was, could you look at March 2020 SPY? Oh, 2020. Oh, crap. I'm in 2024. See if I can even get back that far. Anyway, go ahead, Trent, until I can get back there and find this. That was 2020.
Yeah, we're coming to market open. So let's look at that chart. Your chart's not showing, by the way.
I'm not there yet.
Okay. And then David, he's been swing trading CCL. So let's take a look at that as
What's
well.
It called?
CCL.
Carnival.
Carnival Cruise Line.
Charlie.
Okay.
Larry.
Let me get to that.
Okay.
So Carnival, let me put it up here.
There we go.
Carnival, Death Cross right here. We got Bollinger's coming together. We're in a consolidation pattern. We're just under the 9 right now. Oscillators are, a little bit good on the MACD. There's not much yet on this. If it got above the 9 for me, okay, you're under the 200, you got a death cross. You've got the next level of resistance will be your 20 at 1798. And then you're going to have sells at 1886. And on the bottom side, you have a support level about 1650. We closed at 1798, about $18. So you got about 54 cents on the upside to get to your first level of resistance. And you've got, where are we at? 1650, 18, $1.50 down on the downside right now on Carnival. You gotta ask yourself, this isn't there yet for me. I'm just seeing consolidation. I need to see this thing pop, up in a sustainable manner, and get your momentum up. Momentum's only at 44 basically. But I mean, if you have a trading plan and you're making money, nothing I can say. I mean, it's what you're making money, but it's really it's in a sideways, box for me right now in consolidation. So I'd have to break out of this for me to be interested in that. Let me go see if I can find this SPY real quick. We might have to do this tomorrow and you said March of 2020. So I'm gonna have to go back a ways.
If you want me to pull it up, I can.
I think I got it. Way back here. All right, March of 2020. Okay, so let me see if I can pull this up in a little bit closer fashion.
Good job, David. Good job, David, on CCL.
So March, right about here. Well, I would have been out of it back at this point, and I'd still be out of it. Not yet. I mean, again, we ended consolidation right here. You could have gotten in at this point, which is March 26th. So I would have been out of it mostly all of March. Then we went sideways, then we popped up a little. But I would have been out of it from the beginning of March till about, looking down here, even that. I mean, I don't have much momentum. So I might have actually been out of it until April 6th,
Yeah, it's
depending on how it felt, because the momentum's just not there.
It's COVID,
But-
right? Yeah.
Yeah, this is COVID. Yep.
And think about like what turned that. You went through a shutdown. Was March 13th, I think it was the first I saw, I think out in New Orleans. I think they started shutting down that area.
You're right here.
And then you had the pivot. And that pivot came the week of March 23rd. When did COVID checks start to be talked about and sent out? Was it that week?
I'm not sure.
I think that would be interesting because that would be something to look at in that if we saw Powell come out and lower interest rates, that would spur on a market move higher, initially.
Certainly wasn't a V recovery.
No.
I don't see Powell coming out and dropping in.
No, I don't either.
I don't think
But I
he's
think
gonna
it-
help
it-
at all.
Worried. He's worried
No,
about, inflation due to tariffs.
but it's more of what event caused that pivot in March of 2020. What caused the pivot in May of 2009 or somewhere in there? What news item, what event? And I think that's something to take a look at is when do you see a capitulation or a bottoming? What are variables that inspire that? And what could we be looking for now that would cause a turn in the market to go higher?
2009 was Paulson agreeing to pump money into the banks.
Okay.
That was the pivot at that time.
Yeah.
He was fueling the banks because they were failing. And the only one that didn't need the money was JP Morgan, right? The rest of them all needed money to survive it because they were all into the credit default swaps and they were sinking.
Right.
Now,
Yeah.
I don't particularly remember what happened during COVID. I mean, I do know that they approved all this money to land on everybody's couch, for all the time that they took this money. I mean, I remember that part, but I'd be very honest with you, during that time, I was too busy running my company because our government was just handing out money like it was candy, free candy at the candy store. You know, come on in, take whatever you want, right? And it went on for
Right.
years. My warehouse workers were making more money sitting on the couch than they could make coming into work for me.
You're welcome.
Thank you for nothing.
Yeah, it looks to me, Trent, like the pivot, if you look at it, you know, here was the down of, didn't happen until about July when we started really moving.
Okay.
So that's probably when the money started rolling, you know,
Yeah.
I would assume.
Yeah.
'Cause
Those are the pivots. Every time the government, I guess to answer your question, every time the government pivots and says, okay, we're gonna flood the banks with money. Okay, we're gonna flood everybody, you know, that paid taxes or whatever with money, like they did during COVID. That's when you see, you know, a change because the market loves when free money is on them is in you know circulation because
Right.
it allows them to spend it, right? The spenders are 60% of our earners, right?
Right. It's liquidity. You
Right.
flood the market with liquidity, people expand, banks expand that liquidity by issuing you and I credit and availability. And yeah. And then you get to where we are now.
Right. Did you show that chart to people on this channel that I sent you yesterday of the vessels are down? This is a weekly chart. I had information on this.
Yeah, I didn't show that. I showed another one. Here, I'll put it up for you
But this
real
is
quick.
showing you what's happening out of China and Taiwan.
Yeah, this is one.
Hey, Bob, do you have access to the Discord?
I do, but I don't have the time for it, very honest with you.
I was gonna say, if you could post this online, that'd be great, so we can backtrack it and get the information ourselves.
I mean, I can put it up on there for
You
you.
got a minute.
But this tells you what's happening. I mean, I said this before that 80 ships got turned around and sent back to China. 80 vessels. And this chart proves it. It came out on the market yesterday, which I'm floored that no one's paying attention to this because this is going to affect Target, Walmart, all the big suppliers
Yeah.
to our market. I don't see anything.
It's on mine.
Okay. You're talking about this one, 30% down? Can
Yeah,
you-
that's what I
No,
see.
Can you put the weekly one that I sent you?
Yeah, give me a second. I gotta send it to my son.
You know, you gotta be careful with the short term like that, Bob. You also gotta look at the
I know
longer
that,
term.
but I think it's important because of
It's an inflection point.
yeah, and Mike, my friend, he schedules the ships to come in. You
You
know,
were saying that
and
yesterday.
he told me, he says 80 ships got turned around, sent back. They're not, you know, that's huge. And the biggest dock is LA. So they're gonna have to see the biggest impact. But the end result is all the big chains are gonna have problems with supply chain, right? Supplies coming in off those boats that were scheduled to come in. Even if they eventually get it, it's gonna be delayed. So there's gonna be a delay of supply chain in the stores. There you go. And this is weekly, right?
Year
So
over year.
look how it
Weekly.
does.
Yeah.
Went from 57.10. Even if you take the week before, it was 10.1. They were slowing down, but it's gone to a huge negative of 43.85.
I would assume that 57 was people trying to get shit in before.
Stuff in, yeah, exactly. Yeah.
Yeah, everybody was stocking up. So,
Yeah.
so now you're seeing, okay, well, we get to the point where we say enough is enough. Let's slow down.
Yeah.
Because even though the tariffs are not going to hit for another, what do we got, 75 days or something like that?
Mhm.
So, you know,
I just
Data
wanted
point.
to, I just wanted to, put this out there because this to me tells you what's going to happen with earnings also, because this is going to be,
Well, one way or another, earnings are not going to be good based upon what's happened since January till present.
yeah, but this is going to make it worse, right?
Well, it's just going to amplify it. I don't know, make it worse per se. You're just
Okay.
bringing it to the front as a core talking point for CNBC. Whatever gets said on CNBC, don't listen.
But what happens when earnings go
No,
down?
what it does is,
When earnings go down, companies start looking for cost cuts, and the biggest cost cut is laying people off, and then people can't pay their mortgages, and then it starts spiraling from there.
Snowball. But that's been going on for a while now. For over this past 5 months or so, you've been hearing about large companies laying people off. A lot of it,
that's true.
and
Yeah,
it hasn't
but
been published, because it doesn't look good, for the previous.
And a lot of those big companies give out pretty good severances, just like the
Yeah.
government is right now. So that hasn't
Sure.
hit yet.
Yep. I'm looking at Tesla, and Tesla's getting sold off at the open. Dropped
Yeah.
like $7, $8.
Yeah, I figured
It's
that was
interesting.
the big guys pumping it up.
Well, no, it's retail. Once it opened to the public, everybody's like, get me out of this because the numbers weren't good.
No,
You
I
know?
understand.
But meanwhile, overnight, it's been steadily increasing. Who's doing the trading overnight?
Well, you got to remember that it's the volume overnight's usually, I don't know what it was last night on
Slim.
Tesla. I didn't look.
Slim. But who's doing that trading though? It's more institutional trading per se than retail. Most retail does not dabble in the overnight market.
Right, that's what I was saying. The retail, the institutions were pumping it up on off hours. So then they get the retailers in the morning, and then they pull the rug out, and that's what's happening.
And this is what you got to look for. We opened up here and then down. So that's why we don't chase it open. You let the market roll out. Once market's open now, let me just look at NVIDIA and see what NVIDIA. See, NVIDIA opened here, down. Okay. So just be careful.
You get a lot of residuals that continue from the day before in the after hours market, and you get the overseas tradings. So it's an indicator where you're going to open, but it's never exact. Very rarely is it exact.
It's a great time to sell.
Great time to be sitting on your long-term investments and waiting for the right opportunity to catch an upswing.
Exactly.
That's what
Set
I've been
your
doing.
stops wide and walk away. You're going to get bowled over if you try to swing too much in this market.
Yeah,
You
I
will
agree.
get crushed.
I agree. That's why I said that. I think that this market is, if it were a control chart and quality, it'd be out of control, and you'd be, too many special causes of variation, which is, all these tweets and news articles that come out, and it's just hard to gauge this market because it's broken right now, in my opinion.
And plus also the volume of retail traders that are out there, and that affects price.
Yeah. All righty, we're gonna wrap it up here. This is an hour and 8 minutes. Wow. This is a good one.
Good
Super enjoyed it.
conversation. I'm happy Margaret got to join us while she's driving to Atlanta.
Be careful out there.
Yeah.
And we'll talk to you tomorrow.
We'll see where this ends up. Remember, it's where it ends, not where it starts.
That's right.
All right, guys.
All right. See
Thank
y'all
you.
later.
Thanks for everyone's input. Awesome.
Take care.
Yes.
Bye.
Bye.